TCS is going to kick off the Q1 earnings season, and do know that while Q1 is likely to be a washout on account of the full impact of COVID-19 lockdown, which did impact economies across the globe, do know that management commentary and outlook would be keenly watched out for. In fact, for TCS, analysts or ET Now poll does suggest that we should be seeing a revenue as well as EBIT margin decline. In constant currency term, revenue is seen to degrow by 5.6% quarter on quarter. Dollar revenue is seen at 5130 million, which is a degrowth of 5.8% quarter on quarter. We should also be seeing a cross-currency hit of 40 to 70 bips. EBIT margin may be declining by nearly around 70 bips to 24.4% during the quarter. While a large part of the EBIT decline is on account of the decline in revenues, headwinds from lower utilization, pricing pressure, leverage hit would be slightly offset by INR depreciation, lower travel as well as lower variable pay. Deal bookings will be slow during this quarter. $1.5 billion deal from Phoenix may also be added during this quarter. But as I said, that management commentary would be very important to be watched out for. Hence, watch out for the management commentary on speed and scale of recovery, client feedback, pricing cuts, delay in deals, overall deal pipeline, growth in digital services, demand trends across the verticals, but especially in terms of BFSI and retail for TCS, and progress on the platform strategy. But besides all this, to note that analysts for the entire IT sector do believe that TCS and Infosys would outperform peers during the Q1 season, as the revenue decline for both TCS and Infosys would be significantly lower versus the top 5 tier 1 players. For HCL Tech and Tech Mahindra, revenue decline and EBIT margin would be fairly sharper. Tech Mahindra and HCL Tech may see high digit revenue decline on a quarter-on-quarter basis. In fact, EBIT margin may be declining by 150 to 200 bips quarter-on-quarter for both Tech Mahindra and HCL Tech. Edelweiss analyst does state that for the top 5 IT players, namely Infosys, TCS, HCL, Tech Mahindra as well as Wipro, they do expect a revenue decline of nearly around 3.7 to 7.5% quarter on quarter in constant currency terms. Margin decline of 20 to 110 bips. This is despite the INR depreciation, as well as they do expect that from Q2 onwards we may see some amount of stability coming there. But again, management commentary would be fairly important. In fact, if we look at these stock prices, TCS, Infosys, HCL Tech and Wipro, the stock price have gained anywhere between 27 to 30% since 25th of March, the lockdown that began in India. But for the IT index also, we have seen a gain of nearly around 30%. So yes, IT sector has been seen as a defensive play, but analysts, for instance, like UBS, does believe that yes, management commentary is important, but lack of key negatives may also lead to a positive share price action, according to UBS analysts.